The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So it's SPY Sunday, so let's go look at the SPY and figure out what it has done so far since last week and what it can continue to do. So it looks like the SPY continues to push up. I believe last week was right over here. Prices closed at the 395 level. Looks like prices were setting up to get a lower high, and it failed to get below the EMA, and then prices rallied higher. It looks like it already made two legs up. So you can see how there's one leg up right here. This is the second leg, very close to it, so we could see a sell-off here, especially because we are near this resistance level. So it looks like the range highs could be right about here, and the range lows right about here. So in the past, I was expecting prices to continue to drop down from this red bar right here due to prices not reaching the lows of the range. At first, my lows of the range were a little bit lower, so I thought, okay, we have a little bit more room to go, and now we close below the EMA. This could be a long trap, but it looks like we already had two legs down. You can see that prices made one leg down, two legs down. Measure move was perfectly met. We saw a rally, and also there was this small little uptrend channel that prices were still inside of. So that short was probably a trap. If I was trading, I probably would have got trapped, but now I see the mistake I would have made. Is that the prices did reach the lows of the range. You know, the lows of the range are probably like right around here, and since this was in the middle of the range, that's probably not where you want to enter. That's where it can get choppy, and since we hit the lows of the range, we go to the highs. So that's what prices did. We had two legs down. Prices made one leg up, a pullback, and it made the second leg up to the highs of the range. And also in the macro structure, you can see there was this previous channel right here, and normally we get two attempts at a new high. So this all was one attempt, and it already made a new high. Prices sold off in the form of two legs down, which can mark the center of the pattern, and now prices are in the formation of the second attempt higher at a new high. So this one will probably just exceed this swing high right here. So that's what it looks like the market is doing. It's looking like it wants to attempt to reach the 424 level. We are near resistance, so we could just get rejected from here and just sell off sharply. But it looks like bulls are trying to reach the 424 level because that's the measure move target, and they want to complete the uptrend pattern. So looking for higher prices. We are a little overextended from the EMA. We are near resistance, so we'll see if we get a large sell-off or not. But if not, it looks like prices are probably rallying to the 424 level. So that's everything I see on the daily chart. You know, in the past I was a little bearish, but after seeing that the lines could be readjusted to a better location, it makes more sense of what's going on in the chart. I believe right about here I was like, okay, I think we're going to be bullish now, and I switched my gears, and prices did rally higher for 3 consecutive days. So it looks like you know, we're going to be probably seeing higher prices still. So that's all I have for the SPY on the daily chart. Here is the weekly chart for the SPY, and overall pattern is still down. You can see this downward structure right here. This is fitting pretty good against the price action, and right now we had one attempt at a new low. Prices are pulling back. Usually the second attempt is the sharper one. The sharper sell-off can occur after the second attempt at a new low. We had this uptrend right here, so I think sellers are waiting for this uptrend to complete. So we had an uptrend, a break. Usually we get two attempts at a new high. This is the first attempt. This is the second attempt. The second attempt is coming right at a key resistance point, right over here at this 427, 426 level. That's where this large sell-off occurred in the past, because in the past this was previous support. Price action came back to test it for resistance, sold off, and we're coming back to test it again for resistance. And now this will be a double test of this level. The second attempt at a new low of a downtrend. Uptrend looks to be complete because we have an uptrend, two legs up. So this could be a key area. I mean, the expectation is prices will continue a little bit more higher towards this level, and then the next expectation is this level will hold and see a large sell-off. Again, that's not guaranteed. We can just rally right through it. No one knows exactly what's going to occur. We just have expectations of what can occur based on, you know, the past and what is more likely to happen. Like, I'm not going to say tomorrow or even next week we're going to rally to all-time highs. I mean, can that occur? Yeah, but it's a very, very low probability. This is more likely to occur in the market. A continuation to the upside, and then probably an attempt at a new low or a sell-off. So we'll see if that occurs. And I'm looking for that new low to be made or attempt to go lower, because this macro uptrend since 2008, 2009, you can see that prices, yeah, pretty much 2009 was the bottom. And we have this massive uptrend. If I connect the swings, this is fitting great against the swings. So since we hit the highs, prices normally work its way to the bottom, but it's taking a lot longer than normal. It's getting hung up around the median level of the channel, where it can get choppy, but it does look like prices can still drop lower. And this is just a guess that if this is all just one leg, which it is, let's just say the second leg will start right about here at the 427 level, then the market can drop down to the 297 level. So we'll see if that occurs. As right now, it's looking kind of bearish for the SPY. Looks like we could be seeing higher prices, at least in the short term. This looks like a breakout pattern. So if we see a breakout, you know, it could fail again. We could see resistance being met at the 427 level, and then we could probably see another large leg down. We'll see if that occurs. This is not really a my analysis right here, this measure move. That's just a guess. But what's more likely to occur is, like I said before, two legs up after this uptrend break, retesting the 427 level, 424 level, and then seeing a large sell-off to make a new attempt at a new low right here, because we just had the first attempt. We could get the second attempt. So that's what it looks like the chart is doing. We'll see if that occurs, and I'll give you guys an update next week Sunday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised on what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.